Welcome to TradeTheMBI.com. This is Jonas Reporters for the 15th, and well, we started off with this short setup here as we were getting lower shakeout. That was the biggest concern on the rising highs, and our expectation was that we would likely come right back to this dip of the lows, even though it wasn't horrible from what we were seeing from an extreme histogram, and we're still not in bad condition. What we've seen though is complete fade out here of the short-term, long-term buyers in the red and the green in the DOC. Short-term buyers have been enough, though, to hold things up. They started to fade a little bit more. Well, at the end of the day here, we had that buyback. It was a pretty good trading day. Now we're seeing the exact same startup again for the midweek. And not as bad on the NASDAQ, you can see. But again, the whole point was it was coming back to these lows right here off of that short setup. Which, and still it was a short setup, but it wasn't much. Now this has been probably making it less dramatic. I mean, it's a huge spike in the euro. We're just coming right back up. And as long as we've stayed off this top side of the normalized range, this still helps. The S&P, you can see the positive extremes on both these from the breakout move. So how long it lasts, probably not that long. The interesting thing about it, though, is that you have orange all the way down here, so you're not anywhere near a short setup. You just don't have a short-term buyer reset. This is all bigger moves, and you can see when the long-term money moves like that, that's strong central bank involvement. And TLT, making a nice little pop-up. Short-term buyers here again, steel popping up, pivot right there. And that usually creates a little bit of support, particularly if you have a flattening of your midterm buyers when they're about to turn around. But the dip of the red line, anything pop here is probably going to hit some resistance pretty quick and just come right back to it. Oil backfilling some of those. We could see that it got an extreme right there. And then once we got below the 13.5 with the steel and stayed down that way, that is a weakness configuration because that's the equivalent of it coming from above, and sure enough, that's what it's produced. Nice little setback. And gold, and this again is part of that whole world economy situation and flux of are we getting sustained growth? Is there problem areas? And are we going to get any of this reform? I mean, there seems to just be a complete deadlock in Congress, and that is really putting a hamper on any kind of sustained growth concept. Though the business environment is still better. So here we had from the day. So we had that short that developed right back over here, which is very clean. We came down to new lows, then we started to get the resets right back in here. And once we got over the 50% line, we retraced right to it, came back to the highs, but then produced the exact same setup, and that's what we're seeing right now, which is just the rising low, bleed back right down to the bottoms. I haven't completely reset because that was an awkward steel reset at the same time you get your short signal. And that tends to happen. It tends to get a little bit more exacerbated, and that's exactly what we saw. Once we broke the 50% there, we moved all the way down. And I'm not finished with it yet because steel, while it's outside of it, once it moves back in here, we're going to be in that no man's zone between where you have steel in between the cyan and red, and that usually is just a continuation. So until that changes, still looking for softness. It's probably going to be more towards the test of these lows down at the 65, 64 range. So it's close enough, but I think that we're starting to get much better volatility. This is exactly what we predicted would happen as we came into that soft start of November. Was really weak with the new money that came in. It wasn't enough to really do anything, and usually in that particular case then you get a little bit of softening and the sell in between there, and that's pretty much what we're seeing at this particular point. So, but if it holds up still well, and as long as we're staying above that, I had the 64 range as a nice support point. If we break below that, then I think that we could see some more extended selling, which is interesting going into the holiday period. Thanksgiving period ranges can sometimes get extremely volatile, particularly as you have the late holiday setups start to develop and you get broader swings. So if we're starting to improve our ranges now, they'll only get bigger as we get into some of the holiday trade, which could be pretty exciting. So we'll look forward to that. As always though, trade well, and we'll talk again later.